Hey, hello, Jack Tubbs with the J Team and Realty One in Surprise, Arizona, coming to you on this beautiful Thursday here in the Valley in Phoenix, Arizona. Hey, I got a little bit of feedback from my yesterday's installment, and I really want to kind of address that because a lot of people said, well, with rising prices, and you're talking about the affordability index. About purchasing a home, and you were asking the question, is buying a home still affordable? Well, yes, it is. And through the different surveys and the different as they looked at the different timelines, and I showed you in that one graph that right now we're at almost historic affordability rates even as prices are rising, and a lot of that is due to our historically low mortgage rates that we're still experiencing, even though they are inching up ever so slightly. But nonetheless, and property taxes, especially here in Phoenix, or in Arizona as a whole, are still kind of tame compared to a lot of other parts of the country. And that's definitely driven up our affordability index. But across the nation, we see affordability really still at close to all-time highs. And one of the reasons is that, when you're a renter, you pay a higher percentage of your income towards your rental payment than you would towards a mortgage payment. As of, people who make $20,000 or more, almost 48% of their income goes towards rent, where if they were a purchaser, only 38% goes towards rent. And that's a huge difference. That's 10%. And same with people that make greater than $50,000, 34% would go towards a rent payment, where 24% would go towards a mortgage payment. And we see all other incomes, it's 26% would go towards a rent payment, where 16% goes towards a mortgage payment. And that's a huge savings. And that's one of the things that we really got to take into account when we think about affordability. Because if we continue to rent, as the old saying goes, we continue to pay somebody else's mortgage than our own. Plus, we don't build any equity, any ownership in anything when we pay rent, except for the person that owns the property that we are renting. And then since we are paying a higher percentage of our income, it leaves less money for renters to be able to invest in other assets, whether it be stocks or bonds or gold or silver or whatever, cryptocurrency, whatever you think is the investment of the day or the best investment for you, that you understand exactly how it works and how it's going to benefit you. You know what? If you're spending more money on rent, you're going to have less money to be able to put in other investments, like I said, long-term investments towards your retirement, or even short-term investments, whether it's going to be real estate that you want to flip. When you're paying more money, more of your income, a higher percentage of your income, you're going to have less money to invest. Number 3, your mortgage repayment is going to remain pretty much the same for the 30 years that you make it. The only 2 things that are really going to be outside factors that can change it, unless, of course, you had to do a rework with a forbearance during the pandemic or something to that effect. But otherwise, it's going to stay the same for the 30 years that you're in there. The only 2 factors that can change are going to be the cost of your homeowner's insurance, and usually you can find a way to equal that out, because you're going to find that an insurer that you're with over time is going to raise rates against you, or raise rates on you, and you'll find a new insurer that's willing to start you out at a lower rate just to gain your business, and you can play that game. Depending on your insurer, on the insurance company that insures your home. And then property taxes. Property taxes property tax related expenses, because sometimes you'll find if you live in a city, sometimes the expenses for trash pickup and all that kind of stuff are going to be also levied in your taxes. If the cost rate rises to the city, it's going to rise to you. So property tax related expenses can increase and change your payment. Other than that, it's going to stay relatively the same. The only thing is about rent. Rent continues to climb, not only to meet the property owner's expenses, but also to add to their profit. So that's one other thing that you have to keep in mind. And if you want to look through 1990 to 2020 rent, asking rent, you can see the huge increase starting 1990 and going all the way up to 2020. You can see how great rent increases over time, where your mortgage payment, like I said, is going to stay basically the same. The only things that can change it are going to be your homeowner's insurance and property tax related issues. And if you want to own a home and can afford it, waiting can cost you. In other words, as we've been talking about, we continue to see, especially here in the Valley, we continue to see value increases month over month, let alone year over year. We're seeing month over month increases in value and asking prices. So, you know what? The longer you wait, the more it's going to cost you. And let's say we get to the very peak of the market and we do see a relax on prices and we see prices recede somewhat. We're not going to see that great bubble burst we saw in like 2008, 2009, but we are going to see we're eventually going to catch up to the demand, and interest rates are probably going to rise a little bit, where it's going to pull some people out of the market, and we're going to see a little bit more of an equalization. Doesn't mean that properties won't continue to rise, but we're going to see it take a longer time to see the kind of value increases we've seen over the past couple of years. So if we wait to that time, then you know what? You could be buying at the time of the market, we see prices relax, or we see these things stabilize, and you paid the very highest price. Probably the best thing for you to do right now as being a purchaser is to purchase now, because if we do get to the point where things do even out or start to relax, then you find out that you paid above and beyond, and you can find yourself underwater. In other words, you owe more than what your home is worth, and so many people did experience it when we had that huge, just cataclysmic bubble burst back in 2008, 2009. We don't face that, but that doesn't mean we won't see a decline in values if interest rates continue to climb and the market slows down. I know I really see it just kind of leveling off and holding values, because we still have such a great demand, and I don't know what it's going to take actually to kill the demand for people that want to move into Arizona, since we continually have jobs being created at a very brisk pace. We continue to see costs in other parts of the country, especially along the West Coast, continue to rise, and people are fleeing from the cost of living to come to Arizona, where the cost of living is much more reasonable. I would just continue to see these kinds of things happening. It's going to be a long time, I believe, before Arizona sees any drop in values. Like I said, we may even out and things may remain static for a while, but I really don't see us taking any drifting or lowering of values for a long time to come. So waiting, answering the question, well, you know what, prices are getting so out of hand, they continue to rise, especially here in Arizona, month over month. We see year over year gains. Well, you know what, if we continue to wait the game out to hope that we get to the point where things maybe level off, how long is it going to take before you start to see prices drop? Waiting can cost you. And yes, the affordability for new homes is, if we just look at renting alone, it's much more affordable to own a home, and it's much more to your personal wealth to purchase, because you're building equity in something that, you know what, even if you can't stay there forever, it's going to always have an intrinsic value that you can sell and gain from that equity that you built up. So yes, it's still affordable. Don't wait. Now is the time. So I can just speak to all you buyers out there. Now is the time. Sellers, if you want to make that step up buy, now is the time, because if we continue to see prices raise, you don't want to buy when we're at the very top here and then start to see prices relax and see taxes increase and all other property related expenses increase. So don't wait. Now is the time. And yes, it's still affordable to purchase a home. And if I can answer any more questions, help you buy, help you sell, maybe find out if it is time to sell, or if truly maybe you should hold off on buying. There are a lot of questions you can ask me and put my experience to work for you. You can get a hold of me at 248-330-7972. That's 248-330-7972. Or you can email me, Jack at thejteam.house, and that's JACK at THE, the letter J, the word team, TEAM, .house. You can call the office, talk to any of my team members at 623-252-4061. That's 623-252-4061. Hey, this is Jack Tubbs from the J Team at Realty One, wishing you the most happy Memorial Day weekend. Remember those who had given their lives rest so that we can continue to enjoy the freedoms that we enjoy right now. Remember that there will be no installment on Monday because I will be out of town, and I will be all back with you on Tuesday to talk a little bit more about what's going on in the Phoenix real estate market. Have a happy Memorial Day weekend.